The STX Nifty is indicating that we'll start above 18,000 and then we'll take it from there, of course. It's been a very strong market and just one-way rally is what we have seen. Dipan Mehta is joining us, Director at Elixir Equities. Dipan, hi, good morning. Thanks for joining us. Let's discuss some stocks and news. Dipan, first, HDFC Life, where there's going to be a block deal. What's your view here?
Good morning, Anuj, and thanks for having me on your show. I think we've seen many deals in HDFC Life as institutional investors try and unlock and book some profits. I think it's been a great investment for a lot of the FIs who bought the stock. And it's never really affected the fundamentals of the company. On the whole, I think HDFC Life seems on a solid secular growth path. And although valuations are on the higher side, I think it's been a consistent performer, gaining market share as well. And the most important aspect is that they have been instrumental in launching several innovative products which have been very well received and very aggressive management also, I would say. So very positive on HDFC Life per se. And maybe corrections which come like this, maybe today also because of huge selling, are good opportunities to add some position to HDFC Life.
Okay, add some positions to HDFC Life. This is a roaring market, Dipan. Looks like we're going to be hitting 18,000 today itself and sustaining that perhaps. What do you buy? Where do you add in a market like this?
Good morning, Sonia. Banks, that's where you have to have a lot of your allocation in your portfolio. I would say at least 35-40% or so banks and NBFCs. I think that's one sector which is going to get more and more into leadership position. It's kind of I would say, new growth phase for the banks and NBFCs. On one hand, credit is looking up, interest rates are moving up, so spreads are also stable. And the credit costs are at, I would say, decade lows for the banking and the NBFC sector per se. So I'm very positive on banks per se. Depending on your risk appetite, you go for the larger banks, the top 3-4 private sector banks, but some of the tier 2 banks also offer a good trading opportunity. Only thing I like to avoid maybe is some of the PSU banks where not completely convinced about the kind of growth rates and the net interest income and the profits before provisioning. Not really convinced about the growth over there. But by and large, I think banks is where investors to look at. And second sector would be automobiles.
Banks and autos. Dipan, hi, good morning. You've had a fairly cautious view on IT services for a while, and that's played out to the dot. Any thoughts now? I mean, I'm just referring to that because that is just now perhaps the only very large grouping of stocks which has not participated, right, in any meaningful fashion in this up move.
Good morning, Prashant, and rightly so. I think it's an externally facing sector, and with overall slowdown in the economy, fundamentals in the US market being impacted, you should expect some dent in demand as far as IT services are concerned. But the long-term trajectory of these companies is exceptional, and they may be perhaps not grow at mid-teens, but at least double-digit growth rate is still assured even in a tough market environment. And very positive on mid-cap IT companies which have corrected significantly. I think they have really been able to manage the environment far better than the large-cap IT companies, and I haven't seen a phase where they are growing at a faster pace than the large-cap IT companies. So positive on mid-cap IT companies which are doing slightly a different type of service or focus on different verticals, the likes of, say, Tata Elxsi, LTTS, or Mindtree. I think Persistent Systems, KPIT, I think these are all excellent companies. And these corrections are good opportunities. If you have a 3 to 5 year type of a view, I'm sure that these companies will give very good returns going forward also.